Good evening. Hello. Just getting started here, seeing whether, hopefully, just wait for a few more people to turn up for the show. Going to be talking about stablecoins this evening. So, quite a lot of news about stablecoins and discussion about stablecoins at the moment. So, thought I'd cover it this evening. Hello, Tom. Yes, it is a tad quiet. Do you mean a tad quiet as in not many people here, or a tad quiet as in the volume of the audio? I had to restart my computer earlier because last week there was a issue where everything was the video was extremely jagged and delayed, and so it looks like a restart has fixed it, and everything seems to be going okay now. So yeah, but hopefully the quality's a lot better right now. It was a bit quiet last week, and then a few more people came along, and it kind of got going and picked up. I am wondering if the time difference we've changed. We've gone back an hour here in the UK, and I'm wondering if that's changed. I know that there's sort of a week of change between the US and Europe in which they're out of sync. Myogi, good to see you again. Another person who was here last week. That's good. So I'm getting a few regulars come in, which is really good. You know, obviously, you know, it'd be great to have some more people on. I've got a feeling these talks being a little more technical, maybe not so many people are watching, as opposed to the talks about price and discussion of news. Yeah, we have a regular group here, and that's good. So I'm gonna keep doing them. I'm gonna loop over some of the other topics that I've done previously, I think, and we'll see how it goes. If anybody has any topics for future, then please feel free to let me know. I'm always on the lookout about what to talk about. So tonight we're going to be talking about stablecoins. So what are stablecoins, and a little bit about how they work and what's going on. So no moon yet, Tom. No, indeed. Unless we can talk about the technicalities of how a moon would work, or I try not to talk about price too much on these talks. I think there's plenty of other people on YouTube talking about price and talking about news and talking about, you know, reading the tea leaves a little bit into partnerships of what companies are doing and who's using what and all that kind of stuff. So I think there's some fantastic people out there talking about that sort of thing. People like Digital Asset Investor and Jungle Inc. talking about that sort of thing. Logic DM talking a bit about that and a bit more about the sort of general philosophy side of things as well. And Kung Fu Nerd covering all sorts of aspects. That guy puts out so many videos. It's fantastic. So there's a lot of people, and Crypto Eri, fantastic. She does a great show from Japan. I love the fluff bit at the end where she talks about some bits about Japan. There's a conference I used to go to every year called the Plone Conference, Software Development Conference, that I used to go to every year, and this year is in Tokyo, and I'm starting to see photos from a lot of old friends coming back from Tokyo. One of them, Paul, has been on the Hello Kitty Shinkansen train, and has been posting photos of that and Kobe beef and things. So I'm a bit jealous I'm not over in Japan at the moment, not over in Tokyo. Love to go there. So Tom saying not interested in price very much. I do think stablecoin is an interesting subject. Okay, yeah, good. Well, I thought it was going to be a good topic to talk and to cover about. And there's a lot to cover, and hopefully, you know, I'm going to be able to cover a bit to give people a bit of an idea about what they're about. Mr. Miyagi saying about interested in regulatory clarity and cobalt progression. Well, as far as I'm aware, cobalt's not progressing. I don't think there's any active development going on with it. But on the other hand, I don't really see at the moment any massive benefit of cobalt. I mean, cobalt's interesting, and it will make things a little bit faster. But I don't think there's anything being held up by cobalt not being available. It has a few nice properties with the XRP ledger in terms of how what's called safety and sort of how the ledger can progress in situations which it doesn't have agreement. So that's great. But I don't see Cobalt as being anything that's holding anything up at the moment in terms of adoption. So it'll be great when it happens, but I'm not sort of holding my breath for it. Regulatory clarity is the more interesting one. And actually today there was a document for those. I will just touch on this because it is kind of interesting, I think. Talking about it. So there was a document, UK regulatory digital assets. Let's see, this might pick it up. There was something today that came out. Yeah, here we go. This should hopefully link to it. Is it here? Committee also criticised. Here we go. Yeah. There's a whole publication from the UK Parliament on crypto assets and the regulatory landscape. I've not had a look through it. This is a sort of synopsis of it. There's a full-on PDF, sort of 50-odd page document, I think it is. It looks quite interesting. I've had a quick scan of it. There's no direct mention of Ripple or XRP. There's lots of mentions of Bitcoin. I think one mention of Ethereum, but I'm not sure if there's anything. There's I think some news in there. It'll take a little bit of time to sort of dig through it. I have seen some people looking at it, so that's quite interesting. So that's one thing from the UK in terms of regulatory stuff that's coming about. So Stuart XRP, hello Stuart, and Melanie Chapman, hello. Gabriel Gresham, hello all as well. Beardson, good evening. Great. So we've got some more people on. This is great, and some again more regulars. Welcome. And for those new to the channel who've not been on here before, just a quick recap. I try and talk about things on a slightly technical level, but the idea being is to try and explain things to a lesser technical audience. So the whole deal is you're at the family barbecue, you say, hey, I've bought some XRP or some Bitcoin, and somebody says, oh, that's great, this internet funny money, how does it work? And then you're kind of stuck. So the idea is to give people a bit more information so that they can hopefully understand a little bit more from the technical level about what these things are and how they work. As I was saying, I don't really dig into price too much or kind of speculation and talking about news, just more about how things kind of work behind the scenes to give people a better idea. So Night Owl, Dr. T sent you. Oh, fantastic, great. That's good to hear. And Hola from Costa Rica, great, good international audience. I'm guessing that's not the Jerry Hall. If so, or regardless, welcome. So let's get started then. So stablecoins, that's what we're going to talk about today. Talk a bit about stablecoins. So what are stablecoins? I'm going to talk a bit about what they are, some examples of stablecoins, and talk about some of the advantages and disadvantages of them, what they could be used for. So what is a stablecoin? A stablecoin in essence is a cryptocurrency that is somehow more stable in price than other cryptocurrencies. So that kind of begs, first of all, the question of stability against what? Because you're always measuring something against something else. So normally we're talking about stable versus fiat currencies. So, you see something like XRP go from, this time last year we were talking about sort of 20 cents, ramping all the way up to $3 something, come crashing back down, go to 50 cents, 20 cents. Bitcoin going up to whatever it was, $20,000, back down to $4,000, $5,000, $6,000, going up and down a lot. And for a lot of people that can be an issue because they want something that's more stable, because either they need to know what the value is going to be longer term, or they're trying to involve it in some other financial transaction that needs to be more stable, so a loan or something like that. So the question is, stable against what? So the most obvious thing in most cases is stable against a fiat currency, and the most popular of those that's used is the US dollar, right? So one example, the one that people mostly have heard of, is a cryptocurrency called Tether. And Tether is pegged 1-to-1 against the US dollar. So what happens is you give them $1 and they give you $1 USDT. So if you see on exchanges, you'll often see USDT mentioned. That's a US dollar tether. and that's equivalent to $1. Now, here's the big thing. They say it's 100% backed. Every tether is always backed 1-to-1 by traditional currency held in our reserves. Anybody who's been following the news with cryptocurrencies will have seen a lot of news with regards to Tether and regards to claims of it being backed and questions about accounting and questions about the backing around Tether. So I'm not going to say too much into that, only that the whole idea of Tether works if there's a 1-to-1 backing. If for any reason there's not a 1-to-1 backing, then that can cause issues. Now, Tether's not the only one. There's others as well. So there's, let's see here, there's TrueUSD, which again is another currency that is backed 1-to-1 with the US dollar. So you can purchase US dollar. So the user submits, a wire. The trust company gives them this true US dollar, and they can then use that instead of US dollars. Now, why would people want a digital US dollar? Well, like I said, it's one of the great things is you can move it around like US dollar, but much easier. And one of the other things that's a little bit interesting with it is it can get around some of the regulations. So in order to trade fiat currencies, some exchanges in some jurisdictions have to be licensed in a particular way. But by using USDT or TrueUSD, they don't necessarily have to be. So one example of that is Binance. So Binance as an exchange has about 200, I think it is, different cryptocurrencies on it. There's lots of them there, and they don't have any fiat pairings. So if you want to use Binance, you can't go onto Binance with your credit card or with your bank details and exchange pounds sterling or US dollars or euros or Singapore dollars, Australian dollars, whatever it is, and get cryptocurrency on Binance. What you have to do is you have to transfer some other digital asset in, so Bitcoin, for example. So one route that people might take if they want to buy some altcoin on Binance is they would go to somewhere like Coinbase, they would use a credit card or a bank transfer of fiat currency, get Bitcoin, transfer the Bitcoin to Binance, and then change that Bitcoin into whatever other cryptocurrency they want to invest in. Now, the problem with that being that in the meantime of that transfer, the price of Bitcoin could fluctuate, and it could fluctuate quite a bit, and it might take a while for that Bitcoin to transfer. So stablecoin could be a way of doing that transfer without a risk of the price changing in the meantime. That is the theory behind it. But you also have the issue of which stablecoin. So Tether is not supported on Coinbase, so you can't use Tether. Now, Coinbase have their own one they've just launched in conjunction with a company called Circle, I believe it is. And so they've got their own one, USDC, I think it's called. And you could use that. But then again, you would need somebody to convert USDC, which Coinbase have, to something like Tether or TrueUSD that Binance use. So there's still some issues with this. But in theory, the point is that they're both equivalent to $1. And like I said, the way they do that is they have some bank backing that. So for every dollar of Tether, there is a US dollar in a bank account. That's the theory behind it. Another one that's recently come out, Gemini Dollar. So the Gemini exchange, the Winklevoss twins, have come out with their own one. It seems like at the moment everybody is coming out with a stablecoin. That's why I thought I'd talk about it, because it seems to be quite the hot topic here. And a lot of people have been talking about stablecoins with relation to things like cross-border payments. So a lot of people on this channel are interested in XRP. That's the currency I'm most interested in as well. And Ripple use XRP for cross-border payments. And the idea being that you could transfer one fiat currency into XRP, transfer it across the globe, convert it from that currency into the final destination. And some people say, well, what about the fluctuation in value in the meantime? Well, with XRP, it's only 3 seconds, so there's not much of a fluctuation. But you could use a stablecoin. And a lot of people say, well, why would banks buy XRP? Why don't they use stablecoins? So you could just use digital US dollars in one stablecoin, sort of fashion to transfer value cross-border payment. But the problem with that is that, again, you've pegged it to something. And in this case, you've pegged it to a US dollar. Now, if you look at what's going on, for instance, in China, they are now doing things like pricing barrels of oil, not in US dollars, but in Chinese yuan or renminbi. That's what they're pricing the barrels of oil in, rather than US dollars. Typically, it's always been in US dollars, but countries are moving away from the US dollars with regards to, what's happening politically in the world. A lot of countries are trying to set up kind of on their own. And maybe they don't want to be pegged against the US dollar. If the US dollar suddenly crashes, unlikely, yes, but could happen, then that currency would go down with it. And if one bank issues one stable currency, so say you want to transfer Singaporean dollars to Australian dollars, right? A Singaporean bank or central bank might issue a digital Singaporean dollar, and an Australian bank might issue a digital Australian dollar. If you transfer from one to another, well, which currency do you use? Do you use the Australian dollar or the Singaporean dollar? And which bank holds what? Because at some point you're going to end up with, if I send Singaporean dollars to Australia, I'm going to end up with an Australian bank holding Singaporean dollars. They'll just be digital dollars now. They'll be a stable coin. But that's pretty much what we have now with Nostro and Vostro accounts, that you have the correspondent banking system, and you'll have a bank in Australia holding a load of Singapore dollars ready to pre-fund. Now, you can kind of reduce the pre-funding requirement because you can move these digital currencies much faster. But still you have an issue of which stable coin do you use, how do you set the exchange rate between them, and what happens, this bank in Australia then ends up holding a whole bunch of Singapore dollars, digital Singapore dollars. Well, what use are they to this bank? They can only sell them back to Singapore, or somebody else that then wants to sell them onto Singapore or do some trade with Singapore. Whereas if they use something like XRP or Bitcoin or a more generic cryptocurrency, they don't have that issue. It's not, Beardson says sounds like a walled garden. Well, exactly, that's what would happen in this case. It would be a walled garden. And so why restrict yourself down when you can use a token that is valued on a wider open market? So that's one of the kind of thoughts about stable coins with regards to cross-border payments. And there's been long discussions on, if anybody's seen, on Twitter, there's massive long discussions with a guy called Ari Paul, who runs a hedge fund based around cryptocurrencies, and some quite long, protracted debates about whether or not a bank-issued stablecoin would be better than something like XRP, in which a lot of people argue, well, consider Ripple holds so much of the XRP in existence, does that effectively make them like a central bank? My personal view is it doesn't, but some people have argued the other way. And so looking here, Stuart says, if a stablecoin is backed by the US dollar or their currency, if that currency goes down, then the stablecoin goes down with it. Exactly. So imagine the situation where so we've had massive inflation in Venezuela, and the Venezuelan local currency is worthless now. So what if they pegged a digital asset against that and it went down? The digital asset would go down. So another country that's holding that, it would then be worthless. And even more so, you've got the issue of trust. Well, if some country issues some radically new digital token, do I trust that on a functional level it's going to work? Has it been tested in the wild? Suddenly they come out with some new token. We've seen reports of certain currencies having exploits and currencies being stolen or problems with the currency. We've had things like Ethereum contracts go wrong and keys accidentally being deleted, or things happening that invalidate the currency. So what happens if I peg all this US dollar against some Ethereum contract based stablecoin, and something goes wrong with it and suddenly it all vanishes? What do we do then? Now that could still happen. There could still be a bug in, say, XRP or Bitcoin. There have been in the past. There will no doubt be in the future. But I guess the point being is you're spreading the risk around a bit more. And not only that, but you have something that, so in the case of XRP, it's been out in the market for 5 years. Bitcoin's been out for 10 years. It's been battle tested. The tires have been kicked. We know it works. Whereas if suddenly a new cryptocurrency appears, is it going to work? So, an example is in the UK, LBX, the London Block Exchange. They're a great exchange. I use them. They are about to release the crypto pound, and they're calling it the LBX peg, which is a bit of a daft name, I think. But anyway, it does what it says on the tin, and it'll be tied to the value of pound sterling on a one-to-one basis. Now they're building this on Ethereum, and it's going to be using the ERC 621 token standard, which builds upon the ERC 20 standard that a lot of them currently use. Now, there could be a bug in that, and it could end up locking up. I'm not saying there's going to be, and I'd severely hope there wouldn't be. But as with any new software, there's risks. So every time a new stablecoin comes out, there could be a risk with it. So something that has been tried and tested for a lot longer is probably statistically safer. So Night Owl asks, wouldn't a stablecoin face the same political barriers in the long run? Well, exactly. I mean, what the crypto pound. Well, we're about to go through Brexit here in the UK, and who knows what's going to happen. But why would a foreign country want to hold digital, crypto pounds during Brexit? There's the same risk as holding real pounds. So it's and not only that, there is a counterparty. There's a backing company. So in the case of this LBX digital pound, the backing is LBX. I mean, they will be holding a matched quantity of GBP in a segregated bank account. Well, what happens if LBX, the company, suddenly disappears? This is the risk that happen, and this is why people have some concerns with Tether, is that there's some questions about the accounting on Tether. And if that company suddenly goes bankrupt and takes all the currency with it, then you've got a problem there. So Tom asks, are stablecoins interesting for market makers? Well, okay, so they are. And actually, that's a really good question that brings me on to the next sort of point of this. So I've talked about stablecoins that are backed by fiat by way of some sort of treasury operation with a company or an entity holding the fiat peg one-to-one, in an account. Well, there's another way of doing it, and that is what an organization called Maker do with a currency called DAI. So how this works, so this is pegged to the US dollar, but it is not pegged by a company holding US dollars in some sort of treasury account. What happens is there's a fantastic video here. If you go to makerdao.com/DAI, there is a video here that explains how it works. And I'm not going to sort of go through it in too much detail, because you'll be able to see what's on there. But the point of the way that DAI works in order to stabilize itself is it is a smart contract that effectively adjusts the interest rate of loans. So what happens is you can create what's called a CDP, a collateralized debt position, by locking up some kind of collateral. So Ethereum, for example, you give them Ethereum, they give you some of these DAI, and that's effectively a loan against the Ethereum. You give the DAI back, and they give you the Ethereum back. But they can adjust effectively the interest rate that you would get back to try and keep DAI in line with the US dollar. So if the value of DAI goes up, then they can adjust the interest rate to try and bring it back down in line. And this is all done algorithmically. So there's no company backing this. It's all done by smart contracts. And there's another token besides DAI called MKR, and that is what actually controls the voting rights of what's called the DAO, the Digital Autonomous Digital Autonomous Organization, I think it stands for, DAO, that controls this. So a DAO is not a traditional company. There's no sort of company with headquarters with a some kind of structure. It's a autonomous entity of which people buy a cryptocurrency that is a vote in that company. They can vote for what goes on there. But yeah, check it out. It's a really interesting way of doing things, in that it is completely autonomous. There are, however, issues that potentially the price could fluctuate too much and completely throw it out of whack if something like that happened. It can probably only correct itself within a certain range. And there was an issue with another algorithmic stablecoin whose name escapes me now, but it was it on the BitShares one? BitUSD maybe it was called, and it went out of whack and in the end failed. And you've got that issue where if it does suddenly fail, it can disappear completely. And somebody summed it up quite nicely on Twitter recently, that they said stable coins have all the potential downsides of cryptocurrency, in that if it goes, it can completely crash down in price, but none of the upsides, because it would never appreciate in value significantly, because it's always pegged to a some other currency, a fiat currency, for example. So it would never shoot up in price like, say, XRP or Bitcoin would, but it could crash if the whole thing fails. So you've got the downsides but none of the upsides. So anyway, market makers. Stuart was asking about this. So yes, it could be interested in market makers, because that is effectively how DAI works. There are effectively, they're sort of market makers, not quite, but that's how it works, in that people take loans out and can make DAI by getting effectively paid interest on this loan that they're doing. So there's people taking loans, there's people offering loans, and the interest rates are adjusted by an algorithm that tries to keep the price stable. And it is a really interesting project. It's written in the main core of it's written in Haskell, which is a programming language that's used a lot for things that you need to be able to try and verify. There's a very big culture about what's called formal verification of software, which you can actually mathematically prove the outcome of softwares, which is pretty interesting. So yes, Stuart asks, are there any stablecoins pegged to gold? Well, yes, there are. There's a couple effectively. Well, not so much stablecoins pegged. Well, no, there is a stablecoin pegged to gold. There's the Digix. Is it Digix? Digix Gold token. Here we go. So the Digix Gold token is pegged to gold, and so here we can see that the price of it, the green line here to US dollars, has been fairly stable over since May on here, and there's probably some more description here on there. Is there a site for Digix? I'm not sure, but Digix is based on gold, and there are actually forms of digitized gold. So Royal Mint Gold, is it RMG? Yeah. So in the UK, the Royal Mint RMG are issuing gold on the blockchain as well. So you can buy that. I keep meaning to look into this in more detail. BitGo RMG wallet. So BitGo is a custodial service that's used by a lot of companies for digital assets. So there's that. There's also actually on the XRP ledger you can buy and sell gold. So on the XRP ledger, there's a company. Let's see, XRP charts. There's a company again. Their name escapes me, but I can look on here and I should be able to find XAU. BPG. No. Maybe there's just not much volume going on there. But there's a company called BPG that issue gold on the XRP ledger, and this could be a great hedge for people, or a sort of safe haven. Unfortunately, it's not used that much, so I'm not sure quite how much use it is with the amount of liquidity it's got. But yes, there is gold on there, and you could potentially recreate. So DAI uses the Ethereum network. You could probably do a similar thing with something like XRP and Codius when that gets further down the line. So Gabriel says Uphold is getting a new stablecoin, UpUSD, which is FDIC insured. Yeah, so this is another trend. So I think so yes, Uphold's coin, and there's one on the Stellar network, Stronghold. I think this is it. Buy and sell digital currency, Stronghold trading. No, maybe not. Stronghold USD. Here we go. Private beta. Okay, so this is a USD token issued on the Stellar network. It's kind of exactly like what we've had on the XRP network for 5 years now. So on XRP, we've got US dollars. So here's US dollar issued by Bitstamp on here that you can buy and sell, and also GateHub, another one that's quite active. So you've got US dollars on the XRP ledger. Stronghold is US dollars on the Stellar network. But again, one of the main things they've got is, they talk about the compliance there, and they, I believe, are FDIC insured as well. So that seems to be a theme that's going on, is that companies are trying to get this, it's kind of compliance and accreditation and insurance to try and allay some of the fears that people might have with regards to what happens if the issue of that stablecoin suddenly disappear. So let's see. Stuart says here, stablecoin is just used to push money in and out of crypto fast for profit making. If it's stable, there's no investment opportunity. Exactly. There's no investment opportunity in it, but it could be a good safe haven, or used if, say, you believe the price of, say, Bitcoin or XRP is going to drop down, then you might want to sell into a stable coin and then buy back out once it's dropped down again. Tom Costner, decentralized autonomous organization. That's it, DAO. So that's what's behind Maker. So Night Owl said, I had this idea a couple of times around building a stablecoin purely to secure profits in the crypto market. Exactly. So and you could use any of these ones. It seems like pretty much every week there's a new one coming out at the moment of stablecoins. So there's plenty there. Again, the issue is regarding trust around them, and who do you trust? So you could trust Tether, you could trust TrueUSD, you could trust Gemini, you could trust LBX Peg when that comes out, you could trust DAI. So yeah, it's where you put your trust. In most cases, there is some kind of counterparty that you are trusting there, whether that's a physical company or whether that's a state or whether a central bank, or whether that's something like a DAO that's issuing them. So again, Night Owl says, whenever you make a decent amount of profit, instead of having to exchange into fiat to secure the earning and reinvest it at the same time. Yes, and there may be some regulatory, say, tax implications. So, for example, it might be that if you exchange Bitcoin into US dollars, you could be taxed. It might be if you exchange into USD Tether, you won't be. I don't quote me on that. I don't know anything about US tax and how it works. I think any kind of sale on cryptocurrency could affect what they call a taxable event. But in other countries, it might be different. There could be other things with it. Another use of stablecoins, for example, is where have we got here? So Nexo offer loans against digital assets. So you could get a loan against, say, XRP or Bitcoin or Ethereum or their own Nexo token. So if you've got a pile of XRP sat there, you could deposit the XRP with them, and then you could take out a loan in US dollars or euros against that XRP. So they will loan you up to 30% of the value of your XRP. So if you had 100,000 XRP and XRP was worth, say, 60 cents, then that would be $60,000, and you could borrow $20,000, pardon me, against that. And what's good with that is it's not a taxable event because you're not actually selling the cryptocurrency, you're just borrowing against it. But you can withdraw in USD Tether, which might be more beneficial. So, for example, for myself, if I want to take a loan out with Nexo, which I'm going to be doing fairly soon, actually, that loan, I'm not sure if they can deposit via euros right at this exact moment. So they would be depositing US dollars into my bank account. Well, it might be that I want to take the loan out, but I want to actually keep it within crypto. Say I was able to actually purchase something directly with cryptocurrencies, and I wanted to keep it in crypto, it might be beneficial to go from Tether to an exchange to the cryptocurrency I want, and then spend it. And then I don't have to go in and out of a bank account in the process, which would possibly be cheaper and faster to avoid. So that's another example about it. So talking about market makers, talking about prices. So what can go wrong? I mentioned about Tether and the price. So remember, Tether is meant to track US dollar exactly. And is this gonna, oh, goodness sake. Right, let's go back and see. Is this gonna let me reload this? I'm gonna have to do this again, aren't I? Rats. Okay, so let's go in here. So I was looking at USDT. Here we go. Right. So the price of Tether is meant to be $1. And so here you see it's been $1, and then September about 20th or so, it dropped down. So there we go. We're down to 95%, 95 cents here. So in that particular case, Tether has lost 5% of its value, which is, a pretty significant amount. But what it could mean is if you had USD Tether, you could actually get a 5% profit by converting that back to US dollars at that point in time. So, whilst market making, and trading shouldn't be possible, there is a potential there. And then it sort of came back up again. But still at the moment, it's at 98 cents. So it's still not quite back up to its full dollar at the moment. And this is mainly, like I said, around news with regards to what's going on there. Now let's compare that, so USDT to, well, there's another one, TrueUSD. And if I look at TrueUSD, ta-da, you can see it had exactly the opposite. So what happened was certain exchanges like Binance list both USDT and TrueUSD, and as soon as things started to go wrong with one, everybody moved it into the other. And so what happened? That spiked up 11%. One's gone down 5%, one's gone up 11%. So yeah, there could well have been, some significant money to have been made there if you were in the right place at the right time and quick enough. But it does go to show that these things aren't perfect, and they try and keep up. How well did DAI do? Well, again, DAI, as we explained before, is controlled algorithmically, and even DAI, you see, jumped up there slightly. So everybody moved out of one and into another. And let's see, Digix. No, that's not the right one, clearly. That's the DAO. That's not their actual token. I'm not sure if their actual token's listed on here. But again, to put this in perspective of this volatility, if we compared it to Bitcoin itself, say, you can see, yes, it's still a hell of a lot more stable than something like Bitcoin in that amount of time, or let's see here, or XRP. Cryptocurrencies are still, traditional cryptocurrency is still way more volatile than a stablecoin. So putting it in perspective, stablecoin's still pretty good, but it still can oscillate a bit, with things. So yeah, I think that's mainly what I had to talk about with crypto, with stablecoins. So if anybody has any questions about stablecoins or anything more to add or want me to cover, there are some other techniques besides just the collateralized fiat or the algorithmic model as well. There are ones that are collateralized against other cryptocurrencies, in which they kind of have to over provision. You have to give them quite a bit more of the kind of loan cryptocurrency, the backing cryptocurrency, to work against it. But there are other ways in which people are doing it, and I believe there are stable coins, backed against things like gold directly. So Nightowl says, hey Matt, I know it's a bit irrelevant at this point, but I'm working a little video series project around blockchain and cryptocurrencies and use cases in coming years. I'd love to collaborate. Yep, I'd love to as well. That'd be great. Just drop me a message. We can go and try and see what we can come up with. Tom asks, are stable coins here to stay? I think they are. Like I said, there seem to be so many of them coming around, and you kind of think, well, how many different ways do you need to deal with something like US dollar? And if there's so many of them, and one exchange takes one exchange takes another, or one system takes one system takes another, then you kind of lose a lot of the benefits. So on that basis, I can see possibly some of them disappearing, and some of them becoming more dominant. Like I said, we've got Tether, TrueUSD, Gemini dollar. There's a number of others as well out there. USDC upholds stablecoin. They're all representations of the US dollar. I'm not sure if there's a place for all of them there. I mean, it upholds US dollar. Well, like I said, somewhere like if Uphold have one, and say WireX use a different one, or Revolut as a bank account use a different one, Coinbase, they use USDC, so it impedes being able to transfer from one to another, which is kind of what the point is. So I think a lot of people might just use more conventional cryptocurrencies, or use something like XRP that can move faster. That's one thing to mention, that Tether is actually issued on the Bitcoin blockchain. So I mean, somebody might be able to correct me on this, but as far as I'm aware, moving Tether moves as slow as Bitcoin. So it could take an hour for a Tether transaction to complete. Some of the other ones run on the Ethereum network, and most exchanges I've used in which you transfer Ethereum, you still have to wait for a certain number of confirmations for something to be valid. So you're still waiting a certain amount of time. So things like XRP, XLM could still be a lot quicker. Stronghold on the Stellar network could be quite interesting. So Beardson's asking, pretty off topic now, but is there a video? Will there be a stream of AI and trading bots? I may well do that. Some of you may know I've got quite an interest in machine learning, artificial intelligence, and trading, and I'm currently running a number of trading bots that are trading on the market. I possibly will do. I might do a blog post. Somebody at a recent cryptocurrency event asked me to do a blog post on it, so I think I will do a blog post. I might do a video on it. We'll see. That could be interesting. How do creators make money from making a stablecoin? Generally, there's some sort of fee in the exchange. So it's possibly a case of when you give them one physical US dollar, you don't necessarily get back exactly one USDT. There is a fraction of a percent or something like that that's taken off as a fee, and that's generally how they make the money. Also, not only that, remember that effectively you are loaning them a bunch of US dollars. They end up with a bunch of US dollars in a bank account that they're probably going to get bank interest on at the very least. And again, this might be some of the deal with some of the speculation around accounting, that if you've got several million USDT sat in a bank account, there's probably a temptation to use that to invest in other things, and it may be that some of those investments didn't pay out. Pure speculation here, I'm not sure. But that's probably how they make their money, is that they use that chunk of money and get some interest on it. And actually, it's quite interesting. There's a number of services coming out offering interest on cryptocurrencies now. So you can deposit cryptocurrencies with a number of the sort of custodial wallets and get 5 or 7% per annum return. You know, I've got some friends that got into cryptocurrency way earlier than I did and have quite a large pile of it, but don't really know what to do with it at the moment and are holding on for it because they don't want to sell it. But they could actually be getting, you know, 5 or 7% interest, and for the amount they hold, that could be a pretty sizable amount of money they could be getting in. Obviously, you have to hand that over to a custodial exchange or a custodial wallet, which means you no longer have the keys. So again, you get back to this risk of one of the great benefits of cryptocurrency is that you can hold the funds yourself. You're passing it on to somebody else, and it depends upon your view on that risk as to whether or not that's a good idea or not. But it's certainly very interesting, some of the business models that are coming about. It's the same with Nexo. And actually, the reason I'm looking to take a loan out with Nexo is I do some what are called arbitrage trades. So I will buy a cryptocurrency on one exchange, move it to another and sell it. Or I will sell a cryptocurrency on one exchange to fiat, move the fiat to another exchange and rebuy it. The problem being is that the time it takes that to happen, it could be several days or a week while that money moves around. And in the meantime, what I wouldn't want to happen is, lovely XRP that I might have sold to do this exchange to suddenly jump up in value. So what I'm actually able to do is keep the XRP in Nexo, take a loan of fiat against that, and then take that fiat and use that as part of the arbitrage route. And if XRP jumps up, well, I don't lose out because I still own the XRP. Now, obviously, the great risk with that is that you don't want to lose that US dollars in the process. This is probably now the good point where I say that none of this is financial advice, and don't listen to anything what I say in that regards. But you certainly won't want to lose it because then you've got to pay back that loan still. But there could be some, points at which that is advantageous in being able to use the value of your cryptocurrency without actually selling it in that case. Stuart asks, there's no way of checking if they actually back the stablecoin, is there? Well, no. The answer is that they will say they are audited. The question being, who is auditing, and do you then trust the auditors? And again, some of the questions that are coming about with regards to Tether, for example, are questions about the auditing and who audited it, and is it's who watches the watchman. There's questions about auditing, and do you trust the auditors? You've got to trust somebody somewhere down the line with this. So, if they're publishing the audits and you trust them, then that's fine. You need to do some due diligence on that, I think, to get the confidence that there is actually the stablecoin there. So then, any other questions? I think we're coming up to 50 minutes now, so we've got about another 10 minutes or so. If people have any more questions, but if not, I will wrap the show up. And if anybody has any further questions, then we can put them in the comments, or we could talk about them in the comments, or grab me on Twitter. And yes, again, if you like this, subscribe, like, etc., etc. Being a YouTuber now, I've got to beg for my popularity, but it does help, and it allows me to do certain things on the channel if I have a certain number of subscribers and likes and that. So it is very much appreciated. And with that, I think I'll say good night and thank you all, and see you next week. If anybody has any topics they want covered on this show, feel free to mention in the topics or grab me on Twitter. And thanks a lot. Good night.